are the suggestions for the Finance Minister?
It seems that FM needs to sort of walk tightrope this time around. We for sure will miss the fiscal deficit target. It's maybe 3.4% instead of 3.2% that was expected. We still will have to maintain fiscal prudence because we got the rating upgrade purely based on our prudence that we have shown. At the same time, there are political compulsions. There's just 15 months to go for the sort of final Lok Sabha election, and we also will have to worry about the rural distress that we have seen post-demon and GST. So possibly we'll see this 3.4% of fiscal deficit this time around. The glide path will change, will not move to 3% of our target next year, maybe 3.1%, and then we'll push that 3% to FY20. We'll have quite a few things already in place in terms of the Sagarmala, Bharatmala, everything has been announced. So I believe a lot of sort of capex will move through those already announced schemes like NHAI, Pradhan Mantri Awas Yojana, and rural housing. So in a way, we'll see a kind of more sort of fund allocation towards road, rail, ports, rural infrastructure, housing. And in that sense, if it can lead to sort of pick up in economy, we'll see a great deal in terms of next year target achievement. The flip side is the oil is moving up, so that may be a downside risk, and we may not be able to meet our fiscal deficit target maybe next time around as well if the price keeps on moving up. This year, we probably missed out in terms of our revenue collection because you look at last year's budget, we estimated nominal GDP growth of about 11%, which turned out to be only 9.5%. Possibly if we hit that 12% nominal GDP next time around, 7.5% growth and a 4.5% of deflator, we may increase our collection. The GST will stabilize, so we'll see increased tax buoyancy. The negative possibly is that we'll not have telecom licensing revenue and will not have the sort of benefit on few other things that we had last time in terms of the excise or the tax that we had on the petroleum products. The prices are rising, so government may need to cut down on that. I don't see much happening on personal tax front, the direct tax, if we talk about individuals. The only thing that I feel should happen is that ATC is sort of a little too crowded right now. So if you look at housing loan principle, which most of the individuals may have taken, the children education fees in form of tuition, if you take these two items, many of us may end up sort of meeting that 150,000 limit that we have. So while the FM may not touch the tech slabs, possibly he should increase that ATC limit from 150,000 maybe to 200,000 or 250,000. That would be a great thing. From a market perspective, equity participants would think that there won't be any return of long-term capital gains tax in some form. If at all, if it comes, maybe that the limit which we have right now is 1 year for definition of long-term gains, we may possibly push it to 3 years. In a way, it's good because that will make people behave, holding their investment for long-term, if nothing else, for the tax saving purpose. So I believe it's a difficult one, but looking at the track record of Mr. Jaitley, I believe we should be able to deliver by striking a balance between fiscal prudence and the political compulsions, as well as sort of doing enough to remove rural distress that we have seen over a period of time.
But sir, what about the jobs? The job market seems to be a bit in distress.
What we can see is first, job market may be in distress, but if the rural economy starts growing, like we are putting a lot of infrastructure projects, especially in rural infrastructure, say for example, rural housing. Now, housing cannot happen without the workers on the ground. So if we start pushing those projects in, there'll be a lot of jobs available. There'll be consumption of basic materials like cement, steel, etc. So those sectors will start benefiting. So it's probably a matter of pickup in economy backed by enough gross capital formation. That's probably the area which we are lacking. Government always targeted it to be around 9% of GDP, but we have stuck with that 5.5%. Once that starts happening, we have that population, market size, And if we have infrastructure and we invest in infrastructure, jobs for sure will come in all sectors maybe.
Okay, sir. So this was the perspective of a finance lecturer. Now, from a personal front, from a family man, what is it that you are expecting the FM to do?
Nothing much, as I mentioned, because he can't do much about indirect taxes, because most of the items now under GST, every year sort of till now in budget we are saying what will get expensive, what will get cheaper. Now that has moved out of the ambit of budget in that sense. So to that extent, budget is less relevant. On a personal front, as I mentioned, aspirational sort of expectation could be that he should push the exemption limit or should widen the tax band, like FICCI proposal suggests that from 300,000 to 10,000 we should have only 10%, and then the higher slab moves beyond that. I don't think in current circumstances those kind of things possible. So maybe my realistic expectation is that if at all you want to change this long-term capital gains tax, try to just change the tenure rather than bringing the tax so the people remain invested. And in any case, government is getting a lot of disinvestment proceeds with good market conditions prevailing. So they probably will overshoot target this time around. Hope the same would prevail next year. And maybe if we can push that Section 80C limit from currently 150,000 to say 200,000 or 250,000, that would help many middle-class families who may have taken housing loan, maybe paying significant amount of tuition fees for their children, and then may still want to invest from tax saving and all other perspective. So I think that should be fine.
For more updates on budget, visit timesnownews.com.